Hi, this is Sailesh Jain, Fund Manager Equities at Tata Mutual Fund. Hope you and your family are safe and healthy in this period of pandemic. We are here to talk about our new offering from Tata Mutual Fund, the Tata Dividend Yield Fund, which we believe is an ideal offering at this juncture. Tata Dividend Yield Fund is an open-ended equity scheme predominantly investing in a well-diversified portfolio of equity and equity-related instruments of dividend-yielding companies. The portfolio construction will lead to a healthy and a balanced mix of both value and growth, thus ensuring capital appreciation with lesser risk. So dividend yield of a company shows how much a company pays out in dividend each year relative to its stock price. If a company shares a significant portion of its profits regularly and consistently with its investors, it is assessed to be having stable cash flows and robust financial and operational structures. Tata Dividend Yield Fund portfolio would largely consist of companies paying regular dividends. We have analyzed based on our past data that dividend paying companies generally provide greater protection during market volatility and generate gains that are in line with the broader market when market stabilizes. In addition to the growing companies paying dividend, we may have out of favor dividend paying companies trading at lower valuation due to adverse industry cycle, balance sheet issues, or capital allocation issues, which may be temporary in nature. We would look to invest in those when we believe there are triggers over next 12 to 18 months that can alter one or more of the above factors and make it a re-rating candidate, thus providing significant alpha to the portfolio. The fund would also invest in REITs and InvITs based on their risk-reward assessments. This fund, thus, would be a proper blend of both value and stable growth companies. Though dividend yield would be the main criteria in selecting companies, other factors like management quality, business growth prospects, financials of the company, product and industry cycle would be considered in each and every investment decisions. Tata Dividend Yield Fund has three broad investment components of the portfolio. A. Investments in dividend yielding stocks. The scheme shall invest in dividend yielding companies which have paid dividends or done buyback in at least 1 out of 3 preceding financial years. The scheme would currently prefer to invest in companies with dividend yields higher than Nifty 50 dividend yield. Point B. Contra to consensus approach. The fund would actively seek to capture the journeys of companies from contrarian bets to consensus bets, thus companies that can potentially gain from valuation re-rating, adding the alpha to the portfolio. Point C. Diversification of the portfolio. The fund also has the flexibility to invest in REITs, InvITs, domestic and overseas securities to exploit tactical opportunities. In a nutshell, this fund would be investing into quality companies with stable business models, generating cash, alpha opportunity by investing into stock experiencing contra to consensus journey. Hence, it is a diversified fund in a strategic combination of growth and value with a medium to long-term investment horizon. The NFO would be available on Groww platform. The NFO will be open for subscription from the 3rd May to 17th May 2021. We seek your support for the same. We request everyone to stay safe and take care of their loved ones. Happy investing to all.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.